All right, for this last video, we want to look at the Schedule K3 and K1 for the non-resident partner in particular. So if we remember the fact pattern here, we've got the U.S. entity, two subsidiaries, one's in Switzerland, one's in the U.S. This U.S. entity is engaged in a U.S. trade or business. And so we need to be very careful and report correctly on the K2 and K3s. What allocation to Jane? Well, I mean, both taxpayers want to have accurate information, sure. But it's really important for Jane to know precisely her allocation of the US ECI, because that is the piece that's going to be subject to withholding taxes in the United States. The income coming from the Swiss company flowing through this US entity up to Jane, there's no withholding tax here at this level, at least not on the U.S. side. It's really just the U.S. side that she has to worry about this. So if we look at the K1, I want to run through some of the basics on the K1. We've already touched on it before, but then we'll start looking at the 8805 for Jane and all the elements of the Schedule K2 and see how all these numbers work together. So pretty straightforward K1, right? We've got Jane Doe here. She doesn't have a U.S. tax ID number. That's fine, but we would recommend she get an ITIN, and that's because when you're a foreign non-resident and you're subject to ECI withholding, you're paying the maximum rate, which is withheld at source. So you very likely could get some of that money back if you file the 1040-NR and claim the taxes. So we would recommend Jane have an ITIN here, but in this case she doesn't. So she's a LLC member, foreign partner, right? That's also very important. Not a domestic partner like John is. So foreign partner meaning she's non-U.S. and she's subject to some withholding taxes on her allocation of the ECI. So there in item L, we see the capital account rec, capital contributed by her during the year, her allocation, net income or loss, and then the distributions deemed to be paid to her during the year. And remember, that wasn't cash that was actually sent to Jane. That was just the cash piece, the tax that was sent to the IRS on Jane's behalf, really. If we go to line 1, there's the ordinary income or loss allocated to her. Remember, that comprises U.S. and foreign sources. So that's where the K2 comes in handy again, so we can see specifically what the breakout is there. Same goes for the interest. This is the total amount of interest allocated to her, comprises both U.S. and Swiss pieces. There's line 19A distribution, and then her allocation of the Swiss foreign taxes on line 21 there, $5,800. So if we touch on the 8805 again, just to keep these numbers in mind, right? $43,716, that is the amount of U.S. effectively connected income that was allocated to Jane during the year. That's the number the partnership comes up with. So what we'll see on the K2 is how we arrived at that figure, right? When we look at the gross amounts minus the expenses allocated on the U.S. side. So if we jump down to the foreign tax credit information, right? So again, this is just Jane's allocation of what was reported on K2, right? So she can see here the amount of gross income allocated to her from U.S. sources versus what's from Switzerland, foreign branch category income, the breakout of the interest, right? So if she goes back up to K1, all right, she can see, okay, I got $43 in interest. And then now when I look at my K2, I can see where those are sourced from, right? So $43, 33 came from the U.S., 10 of it is foreign source and specifically from Switzerland, right? Remember, this example is pretty straightforward. We only have one foreign country, but there's a lot of partnerships that have income and expense allocated from numerous countries, right? And so there it gets quite messy, and it's good to have a schedule like this where we can break out the different type of amounts. All right, so after the gross income section, the foreign tax credit limitation section for deductions, again, there's the breakout of the U.S. versus foreign source. And then at the bottom there, the net income allocations across each type. So $10 and total passive foreign category income to her. And then the foreign branch category income, that's the Swiss piece, the ordinary trader business. And then the U.S. side is, of course, the US ECI plus the U.S. allocation of interest income. All right, so, and then, okay, of course, Section 4, the foreign taxes, pretty straightforward there. Again, remember we touched on this on the K2, but the taxes are allocated between what is tax per the foreign branch and then what's passive. So there's $1 being allocated to her allocation of the Swiss taxes, nominal amounts, but better to be precise. Okay, so this is where Jane gets a lot more clarity on how that ECTI number is coming up. So again, the totals here, this is the total amount of income, gross income being allocated to Jane. So she's being allocated $330, $497 of gross profit income, $43 of interest, and then here's the breakout between the U.S. source ECI and foreign source. So if we focus on the U.S. source ECI, notice that number 134,056, that is the gross amount of effectively connected income allocated to her. But she's only subject to withholding on the net amount. So if we look at the 135,056 and we subtract out the 9340, right? So those are the amount of expenses allocated to her. So let me pull up my calculator here so we can see this math in real time. 134,056. If we back out the $90,000 and $340 in expenses, there's that familiar number, right? 43,716 is the amount of effectively connected income that's being allocated to Jane and reported on this 8805, right? So that's where we're getting this number. So the gross amount of ECI net of the allocable expenses, 43,716, that's being allocated to Jane. That's what she's got to pay tax on. And so the partnership withholds at 37%, and that's how they come up with those values. Okay, so we jump back down to part 10. Okay, so part 10, I think at this point it's clear how the foreign side works too, right? So this is her allocation of net income or gross income and gross expenses from the non-ECI foreign branch category income. Now, there might not be any U.S. exposure here, but think about this practically, right? That all this information could be very helpful to an owner depending on where they might be resident. So Jane's in Bermuda, so she doesn't know any taxes there anyway. But let's say she was a resident of Canada. And so Canada, obviously, she's got the U.S. source issues here. But then it might also be very important for her to know, okay, well, as a Canadian, what's my tax exposure to receive income allocated from other countries, right? So what do I have to do if I am receiving these types of income from Switzerland? How does that change my tax exposure in Canada? So all of this information is very good to provide the partners and the investors so they have ultimate clarity on the types of income and expense that are being allocated to them. And then, of course, in Part 10, Section 3, this is the gross ECI versus worldwide income issues. So this is her allocation of those totals that were reported on Schedule K-2. The one thing that is not allocated here is the personnel. So if we look at K-2, you remember in our fact pattern, we said that the Florida LLC employed 3 people and the worldwide personnel is effectively 8 because the Swiss entity had 5. So Swiss entity has 5 persons working for it. Florida LLC has 3 in connection with that U.S. trader business. So the total worldwide personnel is 8. Those numbers stay the same on the K3. So in other words, we don't take 50% of the personnel and report it here. You get the totals here across the board, but we do take a 50% allocation of what was reported on K2 because Jane is a 50% owner in the business, okay? And so if we touch on John's really quickly here, just to kind of wrap up how his is the same but also differs a little bit. So he is a domestic partner. He's got the same allocations of ordinary income and interest. Now, what's also different for John is because he's a U.S. person, he's subject to self-employment taxes. So that's why we've populated lines 14 and C here for gross non-farm income because John might need this to do his his 1040 and properly complete his Schedule SE. For Jane, as a non-resident, we can go ahead and suppress that because she's not subject to self-employment taxes on U.S. earnings, right? She's a non-resident. Line 21, there's the foreign taxes paid. And then, of course, you can see here on the distributions line, there's nothing, right? So line 19A is blank, no distributions to John. And then as such, there's no withdrawals or distributions reported in the item L rec. And that's because, again, John didn't take any cash out during the year, and there were no taxes or other payments made by the partnership on his behalf. And so that's why there's no deemed distributions. And then part two, so all these are going to be the same as what we saw for James. John's going to see this breakout of U.S. versus foreign types of income. The same thing with the expense allocations right down here in section 2 for the deductions. And then the ECI section as well. Now the ECI section might be kind of a moot issue for John. Maybe he doesn't care so much, but again, this just helps him and all the other investors in this fund, if there were more of them, to understand the total amounts of gross income, the total amounts of gross expenses, and how they are being allocated across these different categories, right? How are they being sourced at the partnership level, and then perhaps the partner level if they have to be sourced by partner and there's no partnership determination. All right, so that covers it. I thank you so much for sticking with me to the end here. I hope this was helpful. Please check out some of the other K2, K3 tutorials I've been putting up. They might be more closely aligned with your fact pattern, so maybe a bit more helpful with some of those other examples. But thank you again. I always appreciate everybody watching. And if you have any questions, feel free to leave the comment below. I try to get to as many of those as I can. And I look forward to seeing you again on the next video. Thank you.